Hello and welcome to our daily market review analysis, a session that we should have carried out on a Friday. I had something come up, so I didn't quite do the live session on a Friday. However, hopefully this one will still catch you in good time to try and prepare for the coming week. So I do apologize for that, but hopefully we will cover something that will be helpful for us. We have US dollar pairs mainly to look at as scheduled, and depending on the time we'll be able to then go over any other charts of interest. So let's begin with the chart on Dow Jones Industrial 30, which is the common chart we look at right at the beginning to see if there is any likely direction available from the equity market. Although recently we note that the equity market and foreign currency market, and indeed the dollar index hasn't actually been in a normal relationship to each other, i.e. with the equity market moving up and dollar index moving in the opposite direction, and that's a normal relationship. But at the moment they both seem to be moving together, or have been for a few days, and that does happen periodically, but then eventually the relationship is restored. So let's begin with this one. As we know, we have been moving up. We had a Friday day when the market came down quite heavy, and it closed back almost back towards the neutral or just marginal loss. So that suggests either we are in the very early stage of that correction we're expecting, or possibly that we will do fairly soon. Looking at just this last leg up here, it would appear that we are in a final wave up of this sequence of 1, 2, 3, 4 and 5 to come, and that five wave cycle is basically one that started off back in the November last year. So wave 1 in bracket, wave 2 in bracket, wave 3 in bracket, wave 4 in bracket, and wave 5 coming up together. RSI at the moment on a daily is still marginally divergent, and so if we have a top now, we will get a divergent RSI, or even if you have a minor correction, another push higher, then we will do so. Looking at the internal waves, which is not quite clear, but we've had a first wave up, that's fairly clear. Wave 2 is clear. Then possibly we've had a wave 3 and 4, so we might be in a process of forming a wave 5, or all of that might be part of the wave 3. So in other words, we might have had wave 1, wave 2, and then this one continued all the way there as a wave 3. We'll get a deeper retracement 4 and then another 5. So we can't rule out a minor correction and another push higher, but most likely we could probably get around about 15,000 as a round figure, and that's about 400 or 500 point above where the market is now. But for the time being, you can see it's in a minor rising parallel line. It was in the upper part of the channel, but now the price seems to be falling back in. So if it was to make another effort and go back up, then all of this might have been wave 3. So we've got a minor wave 4, and we might be going in for a wave 5, or otherwise we've got a wave 5 top in, and then what we saw on a Friday might be very early stage of a possible correction. So no big directional indication from the equity market other than this last leg up with a internal 5 wave is quite likely, if it's not actually completed, will probably complete very soon, and we will expect a minor correction. So that minor correction could be relatively large correction, in the sense that it will come back to at least wave 4 here or deeper. Otherwise a minor correction would be just minor pullback as a internal wave 4, and then finally head up higher. So in other words, this one could be a top. It will pull back a little bit and then form another drive higher, which would complete the 5 wave. And if that was the case, then what we are currently in is part of wave 3, and wave 3 also have a habit of extending. So that's the other thing, is that if we don't get a major pullback, we just get minor pullback within the rising trend channel, and we drive higher, then that too is possible, in which case we might still be in wave 3 progressing to the upside. So no evidence of where we are, other than we are at the very higher end of where this last cycle of 5 waves could be completing, but still have a potential to probably get up to 15,000 before we actually come down. We've now just punctured to 14,500 and pulled back just minor. So in conclusion, we would say we are possibly neutral to upside partial, neutral to upside, until we see evidence of market significantly pulling back. But that significant pullback is still going to be relative, because overall we are still in an uptrend, and what we might have, is the market pulling back to this minor uptrend line. Okay, so that could be, all of that could be wave 3 in a sense, wave 1, wave 2, then internally we got wave 1, wave 2, wave 3, wave 4, and wave 5, and that might finish wave 3. Then expect this deeper pullback for wave 4 and then continue higher. So we don't, well, I am not completely clear if all of this is in fact just a part of wave 3 in bracket, and that wave 3 could extend then, so we would have to move that from there to the upside there. Okay, or otherwise we will probably have what we are looking for. You see, if we do a parallel line here, then we'll see the price action never quite touch that top, whereas normally we would expect to. However, we are in a definite wave 3, because you see in the red channel the price action now is well above that. So in that sense we are in a wave 3, but whether the wave 3 is complete or not, complete here is a wave 4 pullback, and then wave 5. I think we are in a very final stage of a possible intermediate top, if not the main top in that area. Either almost there, nearly complete, or we'll have a small pullback and then complete it by pushing it up to 15,000, and then this 1, 2, 3, 4, and 5 will probably be over, and will come back either as a wave ABC. So that might be A, this might be B, or that might be 5 wave up to give it Y, and then we'll pull back for a wave X. So for the coming week we are talking about equity market just sideways to upside bias, and then maybe on a Monday we might get an early indication of what is likely to take place. On oil we are still pushing up, we're still in an uptrend and still retracing this wave here, but we haven't had any significant pullback other than just 1 day pause. So this could be a fairly strong wave A, wave B, and then wave C, but overall we are expecting that to be retracement of the decline from here. So again oil is pointing up, looks like equities likewise is still sideways to upside, so in that sense they are both currently agreeing, and therefore we would still expect the dollar index to sideways to upside, sideways to downside. So looking at the dollar index, this rising trend channel that we've had in place for a while on the 4 hour here has now been reached to the downside on Friday, but I'm not sure if that is actually a beginning of a new wave, a new trend to the downside. It may be that all of that was a part of a wave 1, wave 2, although I think we've got a wave 3 here in number, wave 4, and therefore we were expecting wave 5, but maybe what we've got here is wave 1 and wave 2. I was hoping for that to be wave 3, but now we've come down here, so that's definitely not wave 3. So maybe what we got is you got wave 3 here still completed, wave 4, and then this A, B, C as the wave A. We're coming down A, B, C as the wave B, so we'll get maybe quite a range of sideways chop. other than that, we were hoping for this being completed. If, for example, we had this as the wave 1, wave 2, wave 3, wave 4, and wave 5, then in fact we were looking for straight market to start declining down. But the very fact that we had this here, I then began to think that maybe we've got rising wedge. So we got wave 1, wave 2, wave 3. I was expecting a wave 4 down here, another push up to complete a 5-wave pattern. So the wave 5 would be complete in a rising wedge. But because of this decline on a Friday, I am somewhat confused. The only other thing I could consider this to be is, for example, we've got wave 3, wave 4, and then we've got a minor one, and then this is A, B, and C. That is possible. So if, for example, I do this one here as wave A, and then this one as wave B, so then this, what we are currently doing is wave C, and then that completes the wave 2, and so now we should get a very strong, because the wave 3 is normally quite strong, so we would get strong wave 3 up, and this is before the opening of the market. So I suspect that if this was wave 2 with a flat ABC correction, then now we are going to be having quite a strong wave 3, for example, wave 4, and wave 5. That's an expectation if we are in a flat wave 4, flat wave 2. So we'll finish up this one as being 4, this being 5, then this will complete 5 over here. That's wave okay, so we'll complete full wave 5 over there. So wave 1, wave 2, then this is wave 3, this is wave 4, and then in this fifth leg we've got 1, A, B, C, expanding flat as a 2, and then we got 3, 4, and 5. So then whole week I would suspect we will probably have a dollar index moving up, wave 3. So then that would complete a cycle over here. So what we had here is wave 1 up, ABC retracement wave 2, we expect wave 3 up, pull back for wave 4, and then final wave 5 before we actually get this decline coming at the end of that. And whilst I'm willing to reconsider my expectation of dollar index, i.e. Just to give you an idea of what I mean, you see many Elliottians are still expecting this low we had back in 2008 as a major low. I don't think that that is the case, but they're expecting that, and what they're saying is that this drive up was wave 1 or an A, and if that was an A, they're saying this pullback is the wave B, and they're expecting that this one now to go up in a wave C. So that's one possibility. If they're saying that's a wave C, then they're labeling this part of the wave somehow as a bullish impulsive move. So they're saying somehow, well, Elliottian International are saying this one is a big wave A, this ABC down is a big wave B, and then what they're saying somehow, and I find it very difficult to accept that, but they're saying somehow this here is a wave 1, they're expecting this one down as wave 2, and then they're thinking we are in a wave 3 up. So this one is a wave 1, this is the wave 2, and we are now in a wave 3 of 3. So the meaning that this one wave 1, wave 2 and wave 3, but this is also wave 1. So wave 1 of a larger degree, wave 2 of a larger degree, and then 1, 2 of a lesser degree, and then this being the first wave up in a wave 3, in which case they're expecting this one to come down here, and then they're expecting this one to really shoot up. That's what they're expecting. So, you know, I'm not completely dismissing that, but I'm finding it that very hard to accept, simply because what we've got, especially in this area here, and more than likely I am thinking to myself that this obviously is a larger wave A. I agree with that, but then I'm also saying that this is a part of a wave 4. So if this is a larger wave A, then I think this is A, B, C as a minor A, and then I'm thinking this one is an A, B and C as a minor C, minor B rather. So we've got larger wave A, then we've got A, B, sorry, larger A, then we've got this one here as okay, so let me just start that again. So they're saying this is the minor A, a larger A, and then this one is a larger B, and they're reckoning this to be a 5 wave move to the upside as a larger wave C. I think it's the other way around. I think that it is still some kind of a contracting triangle, and in that contracting triangle I am leaning toward the running flat, and the running flat would be like a larger wave A, B, and then this one somehow wave C, but it is, so in other words it's A, B, C, but instead of being a normal wave C which comes all the way to here, I think it is more likely that we'll have this as a running flat, wave C topping somewhere here or even a little bit higher, but more likely topping over here somewhere around 84 the maximum, and then possibly turning back down as a conclusion of A, B, and then failure wave C as a part of wave 4, and then coming down. So I'm not expecting this, but I will revisit that. But in a shorter term, just concentrating on this area here, we were expecting this wave C to come up, and it's come up almost toward the full extreme. So what we might have here as an alternate to my view, which is in between. So my view was that this is the final top and we're coming straight down. I'm still insisting that, but instead of a running flat, what I'm thinking is that this is a larger wave A, B, C as a wave B, and we are still in a wave C, and I think that wave C will be truncated wave C, and in the process of forming that wave C, this rising wedge is the wave A, this is wave B, and then we've got A, B and C, if you understand what I mean. So if I was to number them, then I think this one here is a minor A. I'll put that in pink as an alternative, minor A. Then we got this one here is a minor B, and then I'm expecting C. So this 5 wave up was definitely wave 1 or wave A. Then we've got this A, B and C down, okay, as a wave B, and what we're now doing is pushing up for a minor wave C. So once the minor wave C is complete, then in fact we've got larger A, larger B and larger C completing, and we should be then making our way to the downside. So still part of wave 4, but the alternative, they're expecting that. I can't somehow find, I think if we were going to go up, we would have had a much stronger wave up. The only other possibility is that we would have had this one as a wave A, then we've got this as a B, and then on the second cycle we got this as an A, B and C. So even that suggests that we should be only, well, that C can go up to there. It is possible, it's not impossible. You know, we've got wave A, so this could in fact turn out to be a flat. It could turn out to be larger wave A, larger wave B, and then we got A, B and C, which would come all the way to there. That would finish up basically with a flat. But for the time being, I think the very fact that we have a strong resistance and areas where just connecting this trend line down and then putting a parallel onto here enable us to identify this lower high. Price reacted fairly strongly. We've gone above that, so we should expect the upper one now to come into play. And when we look at the RSI on the daily, we've got quite a divergence on the daily, suggesting somehow that we are reaching to the extreme and that there would be some correction. Now that correction, as I suggest, could be sideways with another push higher, but if we do that, we will in fact finish up like so. We will in fact finish up with a larger divergence. So not only divergence whilst this price is grinding higher and we've got divergence, we will have a low here and then we'll have another high, and the RSI will definitely not keep up with it. So we'll get a secondary divergence, and that would indicate that there is actually a final top in place. So even if we have a situation where we've got RSI for example suggesting a secondary divergence, and on the price what we have is we've got a wave 3 here. So we're 1, 2, wave 3, we pull back, which we've just done, and we are now finalizing wave 5, and we've got wave 3 and 5 still outstanding. This is what I mean. Let me just change this a little bit, make it look like a downside arrow. Okay, so what I mean is that we had this wave 1, wave 2, we've got wave 3 complete, then I think if we go to wave 4 complete possibly, and what we have here is wave 1 and ABC extended flat as wave 2, 3, 4 and 5, or we've got wave 3 finished, and then all of this is part of a correction for wave 4, in which waves you go wave A, ABC as a wave B, and then this C. So in other words, either we have a wave 1 in place of this last sequence of wave 5, or we are actually going to be starting this wave 4 from here, and then we'll finish with a 5 wave up. So either we have wave 3, 4 and 5 to be completed this coming week, or we've got this as a wave 4, and what we got now is 1, 2, 3, 4 and 5. The entire wave 5 is yet to follow, so we'll get a higher price. We will probably tag the July high. Okay, so that July high could well be around 84 as topping out process, but we need to keep an eye on a daily getting a secondary divergence, and then on the 4 hour we've got this divergence is now almost complete. So what we now expect is RSI to start making higher high and higher low toward completing this last leg. But I think by the time we get to 84 we will form a top, and that would be the fullest extent of the potential for the upside on the dollar index. And dollar index is not going to go to 100 on this time round. It will go to 100 the next time round. What I mean is that once we have a top around 84, I'm expecting a 5-wave decline strong to break this low, or even just to retest it, if nothing more, retest this one here, which is the 2008 low, and maybe make a new minor lower low, or quite a significant lower low, which I explained in the past. So I'm still expecting a top in the dollar index, and then correspondingly all the dollar denominated asset also either currently marking sideways while the dollar is gaining strength, some of them marking sideways, or will be in a process of forming a bottom, so that when the dollar index begin to decline, those other assets will start rising up. Okay, so in a shorter term, this coming week, I think now we have a possibility, because the complete wave hasn't finished yet, so possibility that the low on a Friday might actually be a low either as a wave 2 of 5 or wave 4. If it is a larger wave 4, then we got a 5 wave up. If it is a wave 2 of 5, then we got wave 2 and 1 and 2 already done, in which case we're looking for wave 3, 4 and 5. Okay, so the dollar index suggests sideways to more upside, and for the time being it looks like the equity is also still moving up with the dollar. It's a little strange, but it does happen from time to time. So we will revisit this area, and probably on a Monday we'll have a little bit better idea about this part of the wave here. I'll make this color a little bit lighter. Let's see if this one shows. Okay, so this one here is what we're looking at. Either is wave 1 and wave 2 in place, 3, 4 and 5 is outstanding, or this is wave 4, I 1, 2, 3 here, and this is 4, and we are now going to get 5 wave up. So if we have that, then it's going to be a bit more upside, but overall around 84 is probably where we are expecting a dollar to top out. So let's move on. We will come back to some other dollar pairs on this particular platform in a second, but for the time being we will go over the US dollar pairs. So in this US dollar pairs, the first one we look at is the dollar Swissy. So dollar Swissy, just in the same as the dollar index, currently has been in an uptrend. We had this big pullback, and what I suspect will be happening is that we've got wave A, B, W, X, and I was expecting that as a Y. I can't label any of these as a 1, 2, 3 because the waves are just too overlapping. So W, X, Y to use wave A, or it might be W, X, Y, X, Z. So in that case we're looking for this here, A and B. This one as an X and this one as Z. So we've got W, X, Y, X, Z, like a triple zigzag, or what looks like, and really I don't think I can happily paint this, but it is possibly like a leading diagonal, like so. So it is possible, but so in other words, we might finish up instead of putting this as the WXY, we might finish up this as the wave A, minor B, and then this one as a C with A, B, C, D, E. So that anyway, either way it becomes wave A in bracket, wave B in bracket, and then we're expecting this wave C in bracket. And again, difficult to label them as 1 and 2, so I'm labeling this as W, X, and then this might be possibly 1, 2, 3, 4 and 5. I would just leave them, I think, as a A, B, and then this one here as a W, X, so we'll have this one here as X, and maybe another X here. So this one is W, X, Y, and that Y could be possibly 1, 2, 3, 4 and 5, but W, X, Y, X, Z maybe. So that would give me with wave A, and then this being A, B, C. So this in fact would give me wave B, and therefore we're looking for either a 5-wave move up to correspond with the dollar index, or A, B, C to the upside. So we've got this A and B, and then this as minor A, minor B, and we're looking for minor C to here to complete that, either a 5-wave or a zigzag in some form to complete this section. So dollar Swissy is likely to be still heading to the upside, probably to area we previously identified around 96 or fractionally higher. Okay, so dollar index still, dollar Swissy still to the upside. And on the daily, what we will have is, now that we have this divergence, or rather this pullback, RSI is pulled back to 50. So on the next time round when the price runs up, we should get a divergence on a larger scale, larger degree. Okay, and we'll go back to 61.8% of retracement of this entire drop from the July high. So dollar index have a more upside, with the dollar Swissy also following the same. Next one is, we'll look at the Aussie dollar. Now the Aussie dollar, for a while we will not get a complete picture of exactly what is happening on the Aussie dollar, i.e. is Aussie dollar still in this triangle, in which case we needed to pull back to the base here before continuing higher, or we will have a much deeper retracement, which I've explained in the previous videos, where for example we've got this as a possible 5-wave move up as an A, and then this one as a minor A in double bracket, minor B in double bracket, and we're looking for minor C in double bracket, which could bring us to 85 or a little bit lower down to around 79 area before continuing higher. So in the current time, what we've got here is not exactly very strong impulsive leg to the downside. So because of that, what I'm labeling this as a possible A, and we are going back up as a possible B, which should probably be fairly close to completion. So this down is some kind of 5-wave down. Again, it's been very unclear, but looks like this one was a leading diagonal to give us a wave 1 in bracket, wave 2 in bracket, then wave 3 in bracket to here, then this as a very complex wave 4, and then we have wave 5, which is like an ending diagonal. So we've got like a 1, 2, 3, 4 and 5, or 5 here with a wave A, B, and currently going for C as an expanded as possibly an expanded flat, which is either say near to completion, because you can see on this 4-hour chart we have a divergence on this area for the waves this sequence higher, and we may even be having this one as possibly like a falling wedge kind of, or rather rising wedge, with A, B, C, D, E almost completing. So I suspect that is near enough done, or will be completed soon, and we expect then another decline. So if this was the B in double bracket, and this here somewhere along the line was with A in double bracket, then we expect another leg down, at least to the base of this rising trend line, to form a triangle. And if that triangle plays out, then we're expecting this wave to bounce back strongly from here to the upside, or we might get Aussie dollar becoming quite weak, Aussie becoming quite weak, and actually going all the way down to somewhere area that I identified earlier, back towards 85 area, around here, 85 or 80 area, before having a second leg up. Okay, so Aussie dollar should be weakening when the dollar index begins to make another big upside this week. this one should decline quite strongly, I suspect. So if anything, we could be looking for a potential short. If you wanted to trade Aussie dollar, then potential short. In terms of the retracement, we have retraced. Let me just put this one where it should be. See, we have retraced 61.8% of the entire decline, and we've also had this ABC pattern to the upside. And if we do a Fibonacci on ABC, then it looks like we've got just over 1-to-1 relationship. For example, 1.272. Okay, so 61.8% retracement of that, and just fractionally over 1.1, and it's got maybe, you know, we could have a little bit more upside if fibs are to be, but really speaking, more than this projection, the decline of the 61.8% retracement is more important. And structurally also, if you can see on this side here where the selling took off, we're back in that area, so maybe we could get more selling, and that's this area here. So this is where the sharp sell-off took place after this minor congestion. So we could actually begin to show weakness, and the RSI seem to be confirming in a sense that it is forming a potential divergence, not a strong one, but you know, minor divergence there, and quite possibly, if the dollar begins to strengthen, although Australian dollar doesn't form part of the dollar index, but it would also weaken because it is dollar denominated asset. Okay, so everything against dollar will be weakening in this coming week. So this is ready for, and it looks not brilliant, but it looks like a rising wedge pattern. So another reason why we should be expecting any breakdown of that could be potential short area, shorting opportunity for the Aussie dollar. And the downside target, as I suggested, is that we're expecting it to come back and retest this rising trend line. So we're looking for a drop to about 90, say as a very conservative to 99, 0.99 is, and he said that would be like a, you know, from where it is now, almost over 400 pips potential. It will probably be similar to this one here. So this was 480 pip, so we might actually get what looks like to be an AB equals CD. So if we do that, AB equals CD, so it comes into an area where we've got rising trend line support coming in, a part of a triangle, if it is going to be a triangle. If it's not going to be a triangle, then we will find when it gets there, we might get a marginal bounce and then it fall over to continue lower down. So far we're labeling this as an A, this as the B, coming down as a C, as the minimum cautious expectation, or this A might turn out to be 1, this might be 2, and we'll get a very strong sell-off down to form a wave 3 with a view of overall declining to 98 area here. 85 area. Okay, or even down to this level, which is around 93. So previously it had a lot of resistance, broke through, had a support here, could come back into that area as a support, and then this one will finish up like a strange looking triangle, but not a triangle anymore. It will be wave A, wave B, and wave C, like a normal zigzag coming into this area before continuing higher. So for the time being, for the rest of the week, I'm expecting Aussie dollar from this chart with a view that it will be declining quite strongly, something similar to this, or maybe stronger. New Zealand dollar. New Zealand dollar is similar to the Aussie dollar, except that it's not been in a triangle, and so we've had this wave A, wave B, and this could be part of a wave C, where we got wave A, wave B, and wave C to the upside, or we have this strange looking flat correction, is that we have this A, B and C, or larger A, larger B, and the rest of it is going to be larger part of wave B, and in there we got A, B, C down. So I know the lettering is getting a little bit more complex here, but what we're basically looking for is that we've had this from the very low back in 2000 and back in 2000, is that we had this ABC up as a wave A, wave B, and we are now basically trying to form next ABC. And in the next ABC, just like this one here was a zigzag, this one here was ABC zigzag, we want something similar to form over here, and in which case we could have this as an A, B and C to give us first zigzag, ABC down, a second zigzag, and then going up. So in terms of the outline, we're looking for minor A, minor B and minor C to give us first zigzag up corresponding to this one. Then we got ABC down corresponding to that, and then we are expecting another leg up, corresponding to this one, and then another leg up which corresponds to that. Okay, so I think we are, in comparison to this one is the first part, this one second part, and then we got one more leg up which will culminate with the dollar index bottoming around 2000 low or a little bit lower in next year and a half or so to come. But for the time being, we're expecting New Zealand dollar to decline, and as a minimum decline we're expecting it to drop to is here. If this 2 is some kind of a triangle, i.e. if you got a triangle like this for example, then along with the dollar, Aussie dollar, where it's coming back to the baseline, we expect this one to come back to the baseline. Okay, but other than that, I'm expecting 5-wave decline to something like this sort of level, around 66 or maybe 63, and then go up again. So basically similar sort of outline to Aussie dollar, is that we've got a week coming up which is going to be weaker for New Zealand dollar, and it should be making its way to the downside, and currently we are in a declining phase, and the New Zealand dollar will remain weaker of the two for the next few weeks, because when we look at the Aussie dollar and New Zealand dollar, if I can just show you that briefly. See here, we've come back towards an extremity of this rising trend channel, and for the time being what we have from the high is we probably had these brackets, these lettering might be not correct, so let me put that one as a possible A in bracket. Then we've had ABC back up, so this becomes possible B in bracket, and then we've got this falling wedge, so that would be wave C in bracket. Wave C in bracket, and in which case we would expect this one to go back up to the upper end. Okay, or we have my major top here, we had this one down as possibly 1 ABC retracement wave 2, or a larger A, larger B, and then this one might be just the first wave down, so this would be like a leading diagonal, in which ways we've got one retracement back to here around 130, and then we'll see another strong selling pressure to the downside. But as I say, the Aussie New Zealand pair, the actual pattern, actual price action is very, you can see over here, is very unpredictable. It's almost like this. So it's almost unpredictable in that sense. So either we are on our way to retracing much deeper back to this level that I outlined some while back, or we will go back up toward the top end, and then then will be complete. And I think recently during the week the New Zealand Reserve Bank of New Zealand made some comment about possibly reducing interest rate, and that then resulted in New Zealand dollar, which was relatively strong, suddenly became very weak. So at the moment we are not trading this particular currency, but as far as we are looking for timing ourselves into other appropriate currencies, or deciding which one we go long or short on, is it New Zealand dollar or Aussie dollar. So from this perspective, it would look like the Aussie dollar will be stronger. It looks like we will be going back up. So we need to see what happens in this area here. What happens in that area there. If we indeed, for example, on RSI, we come back into that area and start dropping, then we will probably be expecting a lot more sideways action. Otherwise, we will find Aussie dollar begin to really start running against the New Zealand dollar and go back up to the top side. So back to the US dollar pair. So New Zealand dollar along with the Aussie dollar, we're expecting a much more decline in this coming week. And then finally this US dollar yen. Now the US dollar yen, if the dollar continues to strengthen, then with the yen it may still push higher or might mark its time sideways. And in this daily chart, starting off from the bottom here, which is the low back in September last year, we've had a wave 1 and wave 2, then we went into wave 3, and in that wave 3, this one is a wave 1, wave 2 in bracket, and then this here is wave 3 in bracket, wave 4 in bracket, and wave 5 in bracket. So I think all of that finished this wave 3. So you go wave 1, wave 2, wave 3, wave 4, and we should be progressing to form this wave 5. So that would complete this 5-wave cycle up to here, and from where we could expect a much deeper retracement down. For the time being, retracement will be fairly shallow. If we look at in a 4-hour, then I think that from this decline, if we assume that was the final decline of this expanding ABC wave 4, so either wave 4 finished here and we are since then in the wave 5, or we might have this as an A, B and C truncated and we've started from here. I can't really make up my mind where it started at the moment, but what we do know is from this low we've definitely started a new 5-wave cycle. So in that 5-wave cycle, I've got this as a rising wedge as a minor 1, 2, and then we've got wave 3 in where we have 1, 2, 3, 4 and 5. So I think this minor wave 3 is probably over. This wave 3 is over. A, B, C retracement is wave 4. So this wave 3, I can put it here. So we got retracement, wave 4. And then we'll expect another leg up there to give us a wave 5. So this would be 1, 2, and then this as a internal. So since here we're looking at 1, 2, 3, 4, 3. Sorry, starting from here, you go 1, 2, and then we got 1, 2, 3, 4, and 5 as the 3, 4, and 5, which could be something like there, and that will only complete this cycle here. But if it starts from there, which we said as a 4, then we've got 1 and 2, then this one here will be 3, 4, and 5. So in other words, for the yen currency pair, we've still got a way to go before we reach a completion of the cycle. And I think that cycle will complete along with the dollar topping out around 84. We won't have this wave 3 completing until we've seen completion of a dollar index topping around 84. So for the time being, this is likely to continue higher. So we would find that this will eventually get to round about almost, I think really we're looking for targeting 100. Whatever retracements we get, dollar yen will not complete this 5-wave cycle until it reaches almost 100 now, although it's still some distance away, but I think it will become almost a reality. It's like a magnet now. And as you can see that we are currently in a 5th leg. So if the wave 1, -1, -2, and this is -3, 1, 2, 3, 4, and currently in the leg 5, then we might be only part way in. So if, in other words, if I do it in a green now, so if in other words, from this bounce here, if this was wave 1, if that was wave 1, then we've had, this is here's wave 2, and in which case we are currently working on a wave 3 which will complete over here, because this is a leading diagonal 1, 2, then 3, 4 and 5. So that's where wave 3 will finish. We'll get a pullback, and then we'll have another final leg to the upside. So I think on that basis we will be so close to 100. The 100 is more likely to be a target, and we will wait and see. We might even get a little bit more complex in here, that wave 3 will probably extend. So where we put wave 3 might not be wave 3. Wave 3 will probably come over here, then we get a wave 4, and then we go for finally wave 5. So wave 3 could extend. So for the time being, for dollar yen, no shorting and really avoiding either side of the trade, but just keeping it in mind. But most likely I think what will happen is when this one tops, we will also get a top in the dollar index, for a temporary top in dollar index, and then we will find this one retrace back for a larger wave 4, and then continue higher for a larger wave 5, and the other currencies will probably mark their way. While the dollar is strengthening and rising against the yen, other currencies will appear weaker than the dollar, so they will tend to go sideways or retracement against the yen. But we won't cover those pairs today. We will cover those later on in the week. So Aussie dollar declining, New Zealand dollar declining, and Swiss dollar Swiss to continue higher. Then we look at the dollar Canada. This is the dollar Canada, and in the dollar Canada, what we've got is this wave 5 still outstanding, and in that wave 5 this week I think we could get that possible top forming. And since the low we had in September, this here is like a WXYXZ, or 1, 2, 3, 4 and 5, but basically rising wedge to say it's a wave A. Then we've got wave B, and since then we're working on a wave C. So because this one had a 5 swings, we're expecting 5 swings in wave C. So in that we got wave 1, wave 2, and I think this wave 3 is done, because we got minor 1, minor 2, minor 3, minor 4 and minor 5. So now we retrace into wave 4. So this week we should be going in to complete this wave 5 to the upside. Wave 5 to the upside here. So that fits in well with the dollar index still moving to the upside. Okay, so we will see a retest of recent high, and maybe this one pushing up even further to the extent that we might almost get a retest of that very deep. I don't think we'll get another high, but we will probably go deep into it, almost like a 90 degrees, 90% retracement. So dollar Canada will be trade to the long side rather than short. Maybe like this. So we've got 1, 2, 3, 4 nearly done, and we'll be looking for moving up in wave 5 during the week. So I think this week is going to be momentous. It may actually result in a dollar forming significant top and trend change. 17th of March, because okay, I'll come back to that another time. So dollar Canada is to the upside. Then that leaves us with the euro dollar. Now in the euro dollar, I was expecting another leg down. It didn't happen because of the time symmetry. What I was expecting, for example, on a time symmetry, is that up to here, up to the low, is, if you measure from the high to the low, is like on a 4-hour bar, is like 90 bars. And then if we do it from there to here, we need 90 bars that comes into here. So $90 bars there. So that's where we were expecting a possible bottom, but we have to allow some margin of error. So we didn't get a bottom there, but we should find that bottom will form very soon. On the other side, if we move this one to a high, so in other words we do high to a high, then how many bars do we have? Is 95 bars. So this one moves along 95 bars. I think that might not work. I think what we were saying originally, probably we were saying there is a 90 bars, this one coming in 90 bars, to there, then from there to here is 90 bars up to here. Okay, so it might be that is actually we've got low to high to give us 90 bars, then from high to low 90 bars, and then from low to high again 90 bars. So we may expect now another leg down on the euro dollar. So we were expecting a low to form last week, but since the bounce we had on a Friday, and now realizing with the dollar index that we've got almost a 1 week's movement to the upside, So we should get another strong sell-off on the euro dollar, like so, and we might actually even get another lower low, because the longer term, the other thing I'm looking for is when we do a retracement of this entire move up from July low to the February high, we have 50% retracement comes in around 128.50, 128.80. You see, when we had this leg up, we retraced 50%. Then when we had this leg up, on the way up from here, we had 50% retracement. Even on this one, we had 50% retracement. So I think 50% retracement on a euro at the moment appears to be playing out quite well. So it's quite possible that we will actually get to that or marginally breach it before finding a low. So i.e. like 128.50 area will probably be now where the low is going to be, to correspond with the dollar forming a top. So in that process, we have this other lines of support, the pink line connecting this low we had in June 2012 against the low we had in November 2012, and it provides a pivot there, pivot here, which are only minor, but we could potentially run into that trend line as a possible support. Then we have this blue line, which you can see where I've drawn from, is from the low we had back in January 2012. Then again it picked up this pivot, picked up that pivot, and we've come back into that. Now the price recently bumped into it but didn't quite fully breach it. So that area is basically an area, plus also we have this downtrending line which connects effectively, say, one of the low of here. Says if you connect this one, then we've had a retest of that on the way up, broke above, bounced on it. So we could find, basically that's an area I'm looking at where the low will form, and it will be very confusing. But if we assume that the dollar is going to be rising for the rest of the week, then chances are that the euro will trade sideways to downside. It might not really melt down, although many people will expect it will melt down. I don't think it will melt down, because one of the other points that we made out was that the dollar index has retraced very deeply back into the starting point of the decline. So when we, for example, had a low in euro, dollar index had a high in dollar index, and then we moved up whilst the dollar index declined. And then since then we have not quite fully retraced 50% of the entire rise, whereas the dollar index has gone right back almost 90% retracement, 88.6% retracement. So that would suggest that out of the basket of currencies making up a dollar index, euro is still relatively strong, although it's declined against the dollar, but it's still relatively strong. So the currencies that really gave way was currencies like yen, Canada, and pound, and Swiss to some extent, and the other one I think is Swedish krona. So those currencies gave way against the dollar more so than the euro. So if a euro is proving to be resilient out of the basket of currencies making up the euro, making up the dollar index, that may still continue to be the case. That means the other currency will probably lose out more in the coming week, when the dollar is still making new high in the current cycle, and the euro will still decline, but probably not to the extent where everybody's expecting. And if we do really get a sell-off, then I think I'm expecting it to come back to this area, which is 61.8% retracement. Then of course structurally we've got previous area of resistance, recent area of support, could become a second support, double bottom, and then the euro will blast off, I think. So looking at the euro in the shorter term is that the high on a Friday was a high in this current congested area, and I've put some these waves in, but really we might even finish up with major decline up to here, and then subsequently we've got some kind of a sideways correction. So instead of these being X, Y, and W and kind of things, we've had A, B, C up here. Then we got this sideways retracement as an A, B and C, and now we've got our next leg down to complete the cycle, which means that either a low around 28.50 or maybe dropping down to like 26.80, so say call it 27, 28.50 or 27. And by that time the dollar index will complete its current move to the upside, and then I think we'll be looking for a trend change. Okay, so dollar index is rising up, euro is going to be depreciating against that, Canada is going to be depreciating against that, and that leaves us one other currency to see whether what that one is doing. Well, this currency, which is the pound dollar. On the pound dollar, looking at a larger scale on a weekly, I have this declining trend line connecting the high we had back in April 2011 and then the high of this year, plotting that onto this bottom range here. So on here I've connected to this spike high and then basically trying to pick up these pivots, alternate pivots, and that currently comes into an area where we expect to support. But more importantly, we had this leg up from May 2010 up to the high in April 2011, and if we do a Fibonacci retracement, we've come into 61.8% retracement, and also if we do this leg up, then again we come into 61.8% retracement. So we've got double Fibonacci retracement coming into that area, plus structurally we had an area where previously it was the resistance, minor support, we breached but only marginally breached, we came back right up, so we're coming back into an area, so we do expect a support in there. So possibly the pound has actually bottomed. I was expecting a bottom to form you know, like on a Friday, but the price actually formed a bottom on a Thursday and went up. And so far from the look of it, a little difficult to say, but you see, if you look at this one, this here looks like a wave 1 up. So 1, 2, 3, 4 and 5, so wave 1 up. Then we've got this ABC decline, wave 2. Then this one looks like a wave 3. So 1, 2, 3, 4 and 5. So wave 3, retracement 4, and then so what we might have is the A. This one might retrace a little bit deeper and then go up for wave 5 like so, and that would complete the 5 wave move to the upside. In terms of the trend channels, so this is the wave 1, wave 2, wave 3, currently in the process of wave 4, then we'll go up in a wave 5. So I expect pound to be relatively strong. Otherwise we've got something else coming up in a pound, is that if this was not the bottom, then we might decline again to form another bottom lower down. My perception is that we have a bottom in the pound, but you know, we got at several degrees in geographically, in terms of a price level it appears correct. In terms of the RSI, you know, on a daily you can see we had a divergence here, and now we've broken above the falling trend line. In terms of the time sequence, we were approximately in that area, which is a low formed a little bit earlier. And in terms of the wave count, which has been difficult also, but you can just see that from the very high we had a 5 wave down to form a wave A, wave B, and then we got another 5 wave down as a wave 1, wave 2, wave 3, A, B and C to form a wave 4, and then this final one as a wave 5. So I think the pound has bottomed and the pound is now on its way up. How far it will go will remain to be seen. I think that pound has bottomed, put an important bottom, and we will go all the way to the upside, but I could be completely wrong, and in which case we're only going to be expecting a retracement of this. So ABC, so we expect a retracement of the ABC zigzag, So we could come back to somewhere around 155 area maybe, or 154, 155, which is like 38% or 50% retracement. But we've had a 5-wave move from the bottom, which appears quite impulsive, quite strong. So if you get an ABC decline on that one, so in other words, after this 5-wave up, if we get like A, B and C retracement, then I think that we're in a strong position for this pound to really make a run. Personally, I think this could be wave 1, wave 2, and then we should be going for a wave 3. So we won't preempt, but I think potentially pound may well have bottomed. And then just very briefly to look through other pound pairs. So other pound pairs, see on a euro, we had a wave 5 there. This one being wave 5, so wave 3, wave 4 and wave 5. This wave 3 being, hold a second, so we've got 1, 2 in bracket, and then up there as a wave 3 is 1, 2, 3, 4 and 5. So the wave 3 in single bracket, so wave 3 in double bracket. Yeah, wave 3 in double bracket. So I think what we got here is this high was wave 3 in double bracket, and then subsequently on the euro we have seen wave A, ABC retracement, wave B, and we are now working our way on a wave C. And in that we would be expecting for euro to decline somewhere around 85, 35 to around 84, and that's what I mean is that I think the pound will be stronger because it's been so weak, now trying to bounce back from oversold condition. And this decline, if you look at in a shorter term, is a 5-wave down. You go 1, 2, 3, 4 and 5-wave down possibly, so we might get a small retracement, and then we will start getting wave 3 strong sell. So euro will be a strong sell against the pound, and that suggests the pound may well have bottomed. And then if you look at the two other currencies we were looking at, this one here, which is the pound New Zealand. Pound New Zealand came down, fell below an important previous low. It's come back down here, but now it appears it has put a double bottom on a daily chart. But more importantly, it has done this A, B and C decline where the low is on 25th of February, and then since then, so that is over here, this low here, 25th of February, we've gone up here, and you can see that leg up is a very strong move to the upside, and then this down is an overlapping and it's been so long. So my feeling is that this is actually a wave 1, and as much as it doesn't make sense, or we were not sure, I think this is the wave 2. So in this wave 2 we've had more like wave ABC as a small a, ABC back as a small b, and then ABC down as a small c. So we finished up with basically A, B and C down. So that meant almost coming into 100% retracement, not quite, maybe something like 90% retracement, very deep retracement. So wave 1, wave 2, and in which case we are on our way to the upside. The trade that we were originally looking for, where we had a potential head and shoulder which didn't really trigger, or if we entered in too early we might have been stopped out. But now I think with this low here, this is definitely a strong move to the upside. Compared with this decline, it's been gradual, very overlapping and agonizing, to say the least. It took so long. I mean, if you look at it daily, 4 hour, this only took 12 bars to go up, and then it took 12 bars to go up, but it took nearly 57 bars on a 4-hour chart to retrace. So that definitely means the momentum to the downside is much less than momentum of the leg up. So since then, what we have, if you look at it in hourly, then I think we've got this rising expanding wedge. So that's a minor one, that's a leading diagonal expanding 1, 2, then possibly 3, 4, and maybe 5. So maybe what we got is a 5-wave up. We are now retracing A, B, and C, which is what I expect. And therefore, if we look at the Fibonacci of the entire wave, then 50% or 61.8% is probably an area where we can start looking for potential long entry. So what the so this is what I'm expecting now. See, down here is we had 1, 2, 3, 4, and 5. So wave A, ABC back up is wave 2, and then a similar another strong leg to bring us back to 61.8% retracement. So around 81.50 to 81.70 area is where we could probably expect a possibility of confirming two things. One is that we have had this 5-wave up, we are currently retracing this down, and in ABC, and it's come to the level where previously we've had support, resistance, and possibly turning back into support. And then on the RSI, on the daily, we've still got divergence to confirm with the divergence what we were looking for previously. We are looking for higher high, higher low on the daily chart. So we're still basically looking for a completion of retracement of that leg up. So we'll finish up with the 1 and 2, and then minor 1, minor 2, and then we should be up in a very strong move to the upside for a wave 3. So I think the long trade on this one will still materialize. It's taken a bit longer, because the pound apparently proving to be very weak, but most likely I think we are getting close now into that. So pound New Zealand still stoking long, pound Aussie in exactly the same way, still stoking long. It's not as clear as a pound New Zealand, but you can see that, whether we call this as a falling wedge or something, but as you can see, it's definitely narrowing down of price actions, and we are forming a low on the daily with an RSI confirming. So if we look at it in a 4-hour, then on the 4-hour we had a strong move up. 1 hour, see, we had a 5-wave move up on this one here, 1, 2, 3, 4, and 5-wave move up. ABC backs with 1 and 2, and then we've had another strong move up, and that is 1, 2, 3, 4, and 5. So we've had a 1, 2, 1, 2, I reckon, and we may still get a bit more sideways. That this retracement could be A, this one could be B, and we might get another retracement like that, or a little bit deeper like the New Zealand dollar, and we look for potential for so we've already retraced 61.8% of that leg up, so we might come down for a bit more deeper, and we should be then ready for in fact, if I put a pitchfork on, I don't know whether that's actually going to suggest or show anything. Maybe not too steep. Yeah, too steep. Yeah, I think it's too steep. So we'll wait until we get a clear indication of a possible bottom forming, and be able to get then time an entry for long nearer this area here around 144.50 area. So they will still happen, but I think we'll have to be a bit more patient, and I think that is all for the time being. Remainder I think we will pick up on Monday when we have a session. We will be going through the pound pairs anyway, and maybe the other charts of interest. Okay, so hope you enjoy this. and that we expect the dollar to remain strong for the rest of the week, and therefore all the dollar denominated pairs will weaken, some more than others, and then toward the end of the week we might begin to see possible bottom forming on those, and the dollar possibly close to topping out. And we will add some more details to that as we go through the week to try and ascertain an exact setup. But other than that, euro basically a sell, but Aussie and New Zealand also a sell, and then Swissy and Canada, dollar Canada and dollar Swissy is to buy. So I'll stop here. As usual, any question or comment, please feel free to let me know, and I look forward to you all having a wonderful time, and see you again on a Monday when you join me for a live session.